Hey there, my name's Curtis Lucas and you're watching Empire Building. So it's been about a week since my last video. As many of you know, I was traveling last week to attend Riot Blockchain's Investor Day on October 20th. That video is to follow very shortly. There's a few things I want to add to this and try to dress it up as best as I can. I'm very excited to bring that to you, and also some additional content that I'm going to be bringing, including interviews with CEO Jason Less and some of the other team members at that site. It was quite remarkable. But for now, I really wanted to revisit, because I missed all the excitement over Bitcoin's new all-time high. Happened the day of the investor tour, and I just really wasn't able to put anything together while I was on the go. There was just so much stuff happening. But I do want to reevaluate where we are today, considering that turned out to be a false breakout. So in this video, I'm going to be talking about what that could mean for the short term, or is there something more substantial we need to be concerned about? So having a look at our long-term, daily chart here, you can already see where I'm going with this. If you were to draw this regression trend channel, you can see that we've merely just retested the bottom of that channel. Now, as we are all very familiar, channels can and do break all the time. But the pullback that we've seen was just merely consolidation down to the bottom side of this current regression channel. Now, so this also kind of brings up a valid point, because while yes, that breakout to new all-time highs was short-lived and was immediately rejected and failed to maintain itself above the former all-time high, and we're currently trading below it. However, we found significant support at about $60,000 and currently trading at about $62,450. Now, what do I think this all means? What's going to happen next? I mean, very rarely have we ever had breakouts to new all-time highs after such a prolonged period actually fail. For me, I think the answer is pretty obvious, and that's that we never consolidated before breaking through. We never found strength. Bitcoin just tore right through it like it wasn't even there. And I think psychologically that has an impact on a lot of people. So to be honest, I wasn't actually surprised at all when it did turn out to fail. But really, I just think that what happened is what should have happened prior to the breakout. If we had approached the all-time high and fell back down to the bottom of this channel and retested former support lines, nobody would have given it a second look. In fact, most people probably would have expected that, which is, I think, what caught many people off guard when we found ourselves at new all-time highs. I know I was surprised. Surprised and delighted, but surprised nonetheless. So now that we've had this correction, is the coast clear? To be honest, I am skeptical of that. So as far as strategy goes, I think dollar cost averaging is still your best bet. If you're already fully invested and are willing to just wait all of this out, that is also a very good strategy. But I do think it's likely that we will see some further downside, at least in the short term. And I only say this because we've been on quite a run since the last time we corrected. And as you can see, most of our corrections after prolonged trends aren't resolved within just a couple of days or even a couple of weeks. It takes some time. So while I'm still extremely bullish for the balance of the year, I do think over the next week or two, it is going to take at least that much time for us to find ourselves retesting those highs. And in the meantime, we could see some lower prices. As far as downside risk, for me, my bottom these days has always been the $1 trillion market cap, which puts us at about $53,000. Based on Bitcoin's current supply, it's slightly above that line, but I'm going to hold that on my chart for the long term. Because even come the next bear market, if we do see one, that's the line I'm expecting to hold. And further to that, there's another metric we can have a quick look at here, and that is one I've used before that has proven quite enlightening and quite useful, and that's a Fibonacci retracement. If we draw that from the former low of the last little wave that we've seen, drawn up to the new all-time high we just formed last week, the 50% retracement is the one that lines up almost exactly with that, or just above the $53,000 mark. And if some of you recall, during our last run-up here, the 50% retracement level was one that held up time and time again. From the low that we formed on this particular cycle to the top here, you can see the 50% retracement is the one that held. Same thing from the one previously, the small correction that we had to the high that was formed there. Exactly the same thing. The 50% retracement level was the one that held. And even when we look at the as we were getting to the top, from the bottom of that to the top of that peak, yet again, actually slightly more, it went all the way down to the golden ratio. The point is, these corrections do take some time to flush out. And even when we look at the one that we previously had gone through, from the bottom that it formed to the top, again, the 50% retracement over and over and over again. So I'm saying this just to point out that this is how Bitcoin tends to operate. Not saying it's going to happen, but have a plan for if it does happen. And also be prepared for it to take some time to play out. Another reason for this, and this is the wild card of it, is Ethereum, how it might behave, because Ethereum actually failed. It touched its all-time high and was rejected, but it's still approaching that height. Unclear yet if we are going to see another breakthrough here, but I wouldn't be surprised to see Ethereum get rejected ultimately from that all-time high and find itself consolidating and finding support yet again. But on the other hand, I've been wrong about these things before. So the point is, you need to be ready for anything. In the long term, maybe most of this stuff doesn't matter. But if you are looking to add to your position, a little bit of patience sometimes pays off. Not financial advice as always, it's just this one YouTuber's opinion, but that's just my thoughts on the matter. In the short term, as I'm recording this, we can see Bitcoin is experiencing a little bit further weakness. So we'll see how this flushes out, but again, patience tends to be the name of the game, and we're not even talking about a lot of time here. Like I said, maybe a couple of weeks at most, but also, generally speaking, I've found that these cycles always tend to last just a little bit longer than I'm prepared for. And also, while Bitcoin does tend to behave itself and follow these types of trends, the mining stocks, as always, have done their own thing. That's where I've never been able to have any success in trying to time these kinds of things. I find Bitcoin a whole lot easier to understand and predict its movements. But how those movements translate to the mining stocks is beyond me. So there's some perspective for you. As always, do with it as you will. I'm looking forward to getting back onto a regular schedule of videos. I'm trying my best to get at least 3 out per week. And as promised, I will be putting together a video detailing the site tour that I went on of Riot Blockchain's facility down there in Texas. Truly a world-class facility and arguably the largest Bitcoin mine in existence, at least by capacity, once it's fully built out. Now, I don't expect that that's a title they'll be able to hold on to for very long, this being a very competitive market and a lot of companies with very bold and aggressive build-out strategy. But nonetheless, Whinstone is a juggernaut, and I can't wait for you guys to see it. That's all for this one. Now let's get back to empire building.